From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Good afternoon. Welcome to the COB. We're zoomed in. Look at us. Welcome. I'm Juliette Sarli on your big screen.
I've got my bag, so I'm kidding. Welcome. It's great to have you here with us on the 23rd of July. It is a positive session, it looks like, for the COB Australia Index. We're waiting for the final figures to come through for the S&P ASX 200, but yeah, looking pretty sweet after that session on Wall Street.
Yeah, it was interesting. I was listening to your your interview with Chris Weston earlier from Pepperstone, and that was, of course, at the very start of the day where he said, look, if we get to 8,000 again today, that's a very strong sign for the bulls. We haven't managed that on the ASX 200, but still, pretty good day, half of 1% higher, and really it's this laggard coming through from not only Woodside, but the fact that base metals were down overnight and gold as well. So, you know, our market is never going to mirror exactly what Wall Street does.
No, we just don't have the same components. And then you throw in the fact that we continue to see pressure coming through in the price of iron ore, and that is even despite that unexpected interest rate cut, the first one in 11 months coming from Chinese authorities yesterday. I was surprised at the time it didn't do anything, you know, for the big miners really. And yeah, the iron ore price not responding to that as well.
And the other thing we should mention is this crypto sort of crash. You noticed some big movements coming through in Bitcoin and Ethereum, and that's really interesting as you're about to see the spot ETF Ethereum the spot ETFs start trading tonight on Wall Street. So of course they finally got that green light. That was years or months of lobbying and 7 months after the Bitcoin spot ETF approval. So a lot of interest in there, just giving people a little bit more accessibility to trade crypto, but you did see the price of those underlying assets fall.
I spoke with a gentleman from crypto.com earlier today about that Ether ETF. You can check that out online, ausbiz.com.au, if you're listening to us in podcast form. But yeah, we had this, I guess, high hopes for the tech sector today. Let's take a look around some of these sectors, Jules, to see what performed well, what underperformed. And yeah, tech following its lead from Wall Street with Wisetech up by 2.3%.
Yeah, worth noting in the fintech space, Zip was a standout too. It was up something like 7%. Let's have a look at some of the other sectors. Of course, we talked about energy, so Woodside out with its update dragging on that overall sector, but Santos had a good day today.
Yeah, it's interesting. So this Woodside energy story, yes, it was the production result today, but it's the purchase of that U.S. Gulf of Mexico entity that is really, and actually we might ask our guest about that. Martin Crabb from Shaw Partners is coming up in just a tick, because that's massive. In terms of LNG production, if this deal does go through, it would put it ahead of Chevron and Exxon in terms of LNG. That's pretty big news for the sector.
Yeah, and a quick look at healthcare. Always defensive when you have a down day, but we did have an up day today and it still did well. CSL, Cochlear, Ramsay Health, Ansell and Sonic all looking positive.
Yeah, it reminds me of a little bit of an interview now that might sort of digress a little bit. You know, we've talked a lot with our guests about what this changing political situation in the United States might be you know, shaping up like in terms of sectors. And my friend from Harper Bernays, his name just escaped
Alex.
me. No, it's his.
Oh gosh, I'm just digging the hole even bigger there.
Anyhow, you can find it online because he talked to us about some of the sectors that might perform better under a Kamala Harris, potential Democrat president, than Donald Trump. And healthcare is one of those sectors that they've got on their watch list right now at Harper Bernays.
All right, let's get into some of those stocks that we're watching. We're talking about Woodside, you know, falling despite that 2% increase in revenue, saying it's on track to meet its guidance. Citi saying that its quarterly production of 44 million barrels, actually 6% lower than its forecast.
Yeah, and we had Axel REE hitting the boards today. It's a rare earths miner, obviously in the small end of town, 12-cent share price there, down at its debut by close to 40%. So it's focused on tenements in Brazil. Hey, Juliette, you had an interesting conversation with the chair of Polynovo.
Yeah, I did. Sadly, we couldn't hear him that well. He was in a car, but you can still catch it online. Shares rising 9% today. The burn treatment developer company rising amid growing demand for the company's products in conflict zones and developing countries.
And yeah, Axel REE, Linus is a little bit further along in its ambitions for rare earths. It was out with quarterly revenue and production numbers today, down by 0.6%. of a percent.
All right, let's get to our guest, Martin Crabb. Hi, welcome from Shaw and
Hello.
Partners. I mean, I do want to get your thoughts on what we've been seeing in US politics and how this is all playing out, because a week ago it was all about the Trump trade, then over the weekend Biden pulling out. I mean, things just changing by the second here.
Yeah, and is Kamala Harris going to be the Democrat nominee? She seems to be getting a lot of support. People like Nancy Pelosi overnight, others coming out. Barack Obama hasn't voted yet. Does the Democrat Party go through a sort of super primary thing to try and choose the next candidate, which some people are talking about? And is Kamala Harris going to be the one that comes through that either? So the market dislikes Kamala Harris, but it also dislikes Donald Trump. I think her net approval rating's -12, Donald Trump's minus 10. I think Joe Biden was minus 28, so it was obvious you need to switch from Biden to Harris. But can she win the election? The market seems to say that she can't, although she's got a better chance than Joe Biden. So I think the thing to look at is ironically probably crypto. Crypto seems to rally when Trump's gaining in the polls and selling off when he's not.
So do you think that was behind the crypto move today?
Yeah, it could be. It could be. I mean, there's obviously this new ETF that's launching as well. So you quite often, when you get these regulatory outcomes, are traders already positioned for it? And is it a buy the rumour, sell the fact? So other people who've been going long Ethereum and other cryptos in expectation that this thing's going to kick off and it's going to be very popular tonight, and do you sell into it? You quite often see that happen. You see a thing that should be positive for a commodity or a company, and it happens, and everyone's already positioned for it. So it'll be interesting to see what happens tonight. And obviously you've got Tesla and Alphabet reporting as well tonight, so that's going to be interesting as well.
Okay, Tesla, Alphabet. Tesla is still very widely held, even though it has been disappointing, although lately, it's seen its share price lift. So when you put it into context for Aussie investors, when we wake up and we start hearing about Alphabet's ad revenue, et cetera, what can we take away from it?
Yeah, well, I think it's easier for Aussies to probably relate to the AI part of the Mag 7. So Tesla's, theoretically part of it, and there is a little bit of AI with autonomous driving and stuff, but Tesla's really an EV company rather than an AI company. So I think for Aussies, it's about the small tech sector that we have does trade in sympathy with the US tech sector, as we saw with things like Wisetech and Xero today. But they're in completely different businesses. Like Xero's cloud accounting software, Wisetech's freight forwarding software. So they've got, I'd say nothing to do with AI, but they're not really that related. But I think it's more around the sentiment that the US market has been driven by the earnings outlook of the Mag 7. And obviously with Alphabet reporting tonight, we're going to see a lead as the market got ahead of itself in terms of its earnings estimates. And if we don't have that leadership from Wall Street, what's leading our market? Because we don't have an AI sector. We're being dragged down by resources, as we saw today. The banking sector's looking pretty expensive. What's really driving our market. And we've been going up in sympathy with the S&P 500 rather than tracking their earnings estimates. It's just been, they're paying more for stocks, so we'll pay more for stocks. So if we don't have that leadership being, I suppose, illustrated tonight by Alphabet, where's it going to come from?
On the economic front, I mean, it was interesting to see that pick up in consumer confidence, those tax cuts coming into our pay packets, people feeling a little bit better. But you still think there's going to be a hike?
Yeah, I think the risk that the inflation genie's out of the bottle in Australia is what's keeping Michelle Bullock and the rest of the Reserve Bank Board awake at night. None of them want a repeat of what happened in the 1970s, where central banks failed to get on top of inflation the first time around, and it came back around and bit them on the backside, and they had to crunch the economy. So they're all worried, and they have this narrative that if we don't do something about this now and it gets out of control, we have to cause more pain in the future. So they're sort of saying they'd rather have a bird in the hand than two in the bush. And so we still think the inflation read we're going to get at the end of next week or the middle of next week on the 31st of July is going to be an ugly one, and it's going to be above 1%, because we've seen enough evidence from other measures of inflation that it's still in the system and they're going to have to hike rates. So the market kind of agrees with that. So the red line is at last night, or probably today's trade actually. You can see there's a little bit priced in for a rate hike. So we've got 435 up to maybe 440. So maybe 5 points is being priced in. So I think that's going to probably surprise the market if they do hike 25 in August, like we think they will. and that's obviously going to be difficult for the economy as well. But it's paradoxical that the economy is so strong, not that it's mega strong, but it's stronger than the Reserve Bank would like, so it has to slow it down, and that's going to cause more damage to stocks going forward.
So avoid consumer discretionary.
Yeah.
But on the resources piece, because we just sort of glossed over that, you know, we have seen really sharp share price falls in the likes of BHP, you know, Rio, Fortescue as well. But we are starting to see a little bit of stimulus coming from China. We will get interest rate cuts, which should be, you know, stimulatory for global growth.
Yeah.
So how do you time the entry into those companies?
It's interesting psychology in that this plenum was going to be the big Hail Mary from Xi Jinping. He was going to save the housing market and save the developers and bail out the banks, and it was going to be great for resources. And we saw, you know, a little bit of a yawn and a 10 basis point cut in cash rates, which is going to do pretty much nothing. So I think the sell-off that we saw today, and it's been coming for a while, like copper's down from $5 a pound to like $4.20 a pound. It's dropped a long way, and they call it Dr. Copper for a reason. It's a harbinger of global growth. So I think people were positioning for a much more positive outcome from the plenum, more stimulus, because if you look at the last 15 or 20 years of Chinese history, they stimulate the property market every time their economy slows down, and people still think that's the playbook, and it just hasn't happened. So I think people were positioned for more stimulus than actually was announced, and hence the sell-off in the resources. But it's been happening all month. It's not just today. I think the resources are down 6 and the industrials are up 6 or something this month. So it's been quite a dramatic shift.
What about the small cap rotation on everybody's lips?
Yeah,
continues?
I heard George Baburis talking about that on his show earlier, and it's like everyone's talking about this great rotation out of the big caps and into the small caps. And you look at valuations and relative valuations, and it does seem to be logical that we'll see some rotation out of bigs into smalls. But I think the world's a little bit different in that some industries are winner take all or winner take most. I don't know about you, but I'm sick of tripping over e-bikes in Sydney.
Yes.
But that's a classic example of two players fighting for market share and just absolutely flooding the market with e-bikes. And one of them's going to run out of money. And then the one that's left will put up prices and control the market. We saw that happening with ride sharing, exactly the same thing. We used to have 5 or 6 or 7 different ride sharing companies, but in most countries it's winner take all. So we're seeing it in a lot of industries, and so the big just get bigger and stronger and the small get left behind. And so I think it's overly simplistic to say, well, small companies are trading at a discount to big companies, therefore you should rotate. I think it really much depends on which game you're in. Like in semiconductors, TSMC produces 75% of the semiconductors in the world. In lithography, ASML produces almost 100% of lithography, hard word to say that, machines. So in some industries, you don't want to be in the small guy, you want to be in the big guy. So I think you've got to be stock specific and sector specific if you're going to do that rotation.
And everybody, pick up your bikes.
Yeah, please pick up your bikes.
I got
Stop littering.
almost run off the sidewalk this morning.
Oh gosh.
Footpath,
Well, also,
I think we say here.
Footpath, thank you.
Excuse me. Just a quick thought. You know, we're below that 8,000 level. We'll be closing below that today.
Yeah.
Does that sort of go to show that bounce that we saw last night on Wall Street, perhaps a dead cat?
Yeah, I don't think so. I think, look, everything hinges on these numbers. If these numbers from the next week and a half, where you get all of the companies reporting, are going to be stronger, Nadine, then the market's going to move higher.
all right, Martin, always a pleasure. Thanks so much,
Thank
Martin
you.
Crabbe from Shaw & Partners. And I don't throw you under the bus without picking you back up again. You spoke to David Walsh
I did
from
speak
Harper
with David
Bernays.
Walsh. Thank you, friend. All right, let's get on to the stock of the day. It was Woodside. A lot to talk about there. Let's see what Mark Moreland from Team Invest and Ben Clark from TMS Capital had to say.
It's a complex business, very capital intensive, and it's totally reliant on energy prices and so on, which are very, very hard to predict. I mean, there's analysts who work full time on a company like Woodside to try and understand it all and work it all out. But even then, you have to make assumptions, and you can model that into anything you want it to say. It actually doesn't look too bad. I mean, it fails for us on return on equity, just it's slightly under. Other than that, it passes all the filters.
You've got to be careful with commodity businesses, and Woodside's not for me.
All right, so what would you sell? I mean, it has, as I said, it's down
I'd probably say a hold, because I think
Right.
for me, Woodside is more of a trading stock. You buy it when it's really out of favour, and you let it go when it's, because there's no track record of it
Consistent.
of growing over the years and years. I mean, Woodside was at a higher share price 20 years ago. It's been a really poor investment. So I'd say a hold.
There you go. That episode of The Call is up online if you'd like to listen to the extended version of that and hear Ben and Mark and what they give, I suppose, the verdict on 10 other stocks as well.
Yep. All right, let's have a look at the leaders today on a day when we did move higher. I can quickly have a look at the ASX.
PolyNovo, I can tell you, was the best performer. So FY unaudited. Sales of $68.7 million, up by 49%. I was speaking with Wim Steemers from AL Capital just yesterday, and he had PolyNovo on his list of 3 companies with enormous potential. You can find that interview up online. So yeah, PolyNovo really kicking it out of the park today, up by 9%.
And I think Insignia also did really well, up by about 7%. We talked about Zip as well. It was up by 6%. Super Retail looking solid as well. And Elders.
Yeah, Telix as well. It had its price target lifted by Wilson's by 11%. Also price target lifted by Bell Potter, although it was a couple of days ago. But yeah, having a good day, up by about 3.5%.
And then, of course, in terms of the losers, Woodside was there, Emerald Resources, a lot of those uranium stocks as well, and Domain down 3.6%.
Deep Yellow has appointed a new CFO. I don't think that would be why its share price is down, but we are watching Paladin Energy down as well. And it had a couple of brokers lifting its price target. So it's clearly a uranium story. Let's see if that's expressed in some of these small to mid-cap companies.
Yeah, all right, there we go. Macro Metals, Imricor, Actinogen Medical, Aura Energy, all looking good.
And Southern Cross Electrical Engineering. Boy, that's quite the abbreviation there.
I know, I was like, I'm going to leave that one for you because there's vowels missing there.
It's one of the sort of fan favorites. With a lot of our guests just really like this sort of picks and shovel narrative when it comes to data centers and the like. I'm going to just quickly check if we've got any news. I can't see any news, so it's an interesting one, that.
All right, on the laggard size, EZZ Life Science, AIC Mines, Meteoric Resources, Demerix, and Hancock and Gore.
Well, I am throwing you under the bus because I get made fun of a lot for my accent and my pronunciation. You said EZZ.
What is it?
It's EZZ.
Oh,
we're Australian.
Because we're back in Australia. Sorry. Yes. Anyway,
I feel your pain. All right.
So getting back to that, the Z versus Z and aluminium instead of aluminum. All right, let's have a look at what is happening overnight. The US Richmond Manufacturing Index, US June existing home sales, Euro consumer confidence, and look, we talked about Alphabet, the Google parent, but some really big names out tonight. You've got Coca-Cola, you've got General Motors, used to be the biggest stock in the US in terms of market cap, Lockheed Martin, Spotify, Tesla, UPS, and Texas Instruments, which is also an economic bellwether. So huge night.
Yeah, and when I was speaking with David Walsh from Harper Bernays today, I think he said Visa was out tonight. I'd have to double check that. But what he did say, if you'd want to go back and listen to that interview as well, Visa releases consumer spending data, but that is up to date. So it's, it always gives an update of just the past few weeks even. And he said that's going to be really interesting to pull out that data point from the results, just so you can see in real time, because, the US consumer has been relatively resilient through, even this rate hike cycle.
Yeah, and spending patterns too, right? Everyone puts things on their credit card these days and then pays it off, hopefully. All right, tomorrow we are looking to that flash manufacturing and services PMI. Pilbara coming through with its quarterly report, and Japan also with its flash manufacturing PMI.
And of course, we'll be, still talking about that inflation read that's to come next week, interest rate expectations here, U.S. politics. And don't forget, we're also getting earnings coming through in Europe as well. I did note just when we were chatting with Martin Crabb that Porsche is out with its results today as well.
So that's an interesting one. Do you say Porsche or Porsche?
I say Porsche. What do you say?
I say Porsche. That's what the Europeans say.
Oh, well, I'll learn to say Porsche. Yeah, maybe fortune favors the brave.
Yeah.
But yeah, its share price is down because it's got an aluminium supply shortage. So there you go. Keep an eye on European companies as well. It's always interesting to sort of color around the edges of what we could potentially expect here come August.
And all our thoughts for people whose second language is English because we are struggling with it as our first. All right, a quick look at the markets. It was a good day, 0.6% on the CBO 200. The ASX 200, also a good day, 39 points, 0.5% higher, 7,971. And as we say, if we more closely mirrored Wall Street, it would have been a better day, but those miners and Woodside dragging us down today.
Yeah, speaking of those miners, I do note that HSBC in the UK has lifted BHP and Rio's price target. So some food for thought as we say goodbye to you for now, but we'll see you at 9:45 ausbiz.com.au tomorrow morning.